Finally, price left the range and we started to move again. Finally, about time. Like past 6 trading days, market was basically dead. We finally left the range, but unfortunately, I was not able to capture this move. So I came to the market today. I saw the small range. We really did nothing on PPI. It was not looking like a probable trading day. It was looking like, you know, something that was probably going to play out as the last couple of 1, 2, 3, 4, 5, 6 trading days did. But looking at more information, like, okay, you know what? Maybe today could leave the range. So I came to the market, ruled out the day a little bit too fast, and then something else, kind of this a discrepancy that I had in my pre-market plan also made it a bit iffy for me to execute. So today is another no trade day, which is never a bad thing. It's good for me to be selective. It's good for me to pick and choose my shots because my model is extremely selective. And it really only affords around 8 good setups a month. Today definitely could have been one of them and I missed it. So let's get right into it. So today's August 13th, 2026, and this is the daily log. I'm gonna close this right here. So I'm gonna skip the emotional check part of my pre-market process because for now I'm just paper trading, still trying to, you know, build momentum, get back in touch with the market, which at this point in time, I'm pretty in tune with the market. I'm in sync with the market. I'm following my model. I'm following my system. I'm no longer violating my rules. You can see that on the calendar the first 3 trading days back were pretty rough. Where's the calendar? Oh shit, I gotta find it. We're pretty rough. I was literally deliberately violating the rules of my system pretty much every single trading day and then kind of settling back in on the model. Okay, this is exactly what I'm trying to do. As I continue to audit every single trading day that I took on the live account, I just get more and more insight to exactly what it is I'm trying to do. So let's go back to today's log and I'll read y'all through this, what I was thinking on the daily time frames. The past 6 trading days now have proven to be absolutely flat, stuck inside this range, though I still lean bullish based on what I see on the 4-hour. We have a 143 point range overnight in pre-market, even after PPI release trading inside of PDR, all pointing to a shit trading day. So you can see that from the first field, the daily field. I'm not really expecting a probable condition today based on what I'm seeing, based on the past 6 trading days. But the 4-hour really showed me some information and I was like, you know what? We could potentially squeeze out of this range today. And that's what I had conviction with going into the open. You'll see from here, I say the 4-hour shows no reason to be bearish still, and price is compressing inside this range. I like how it's respecting the bullish order block from Tuesday, and we're now showing 4-hour accumulation trading down into it. This tells me the potential to squeeze up out of this range is there. So let's go to the daily. We can see that I'm just kind of basically iterating what makes this a day that I don't want to engage. Number 1, extremely small range overnight and pre-market range. Number 2, we're trading inside of the previous day range. It was still an inside day going into the 9:30 open, and we had no response to the release of PPI, so nothing was really pushing price around it. At least that's what it seemed like until it was the right time, 9:30, then we just left. So I'm saying I'd rather let it leave this range and have the condition improve than try to trade it speculating that it's going to leave the range. So that's kind of the whole basis as to why I did not trade today. Now on the 4-hour, this is what I really see that caught my attention. So these are my pre-market screenshots. You can see the time is 9:06 Eastern Standard Time. Note what we have here. So price is compressing inside of this range. One of the things that I liked, so it tells me it's sort of bullish and can leave the range, is this right here. I really like how price is respecting the 4-hour order block and has shown accumulation in the lows, which is also shown on the hourly at that discount rate. So this is our change in the state of delivery. We have this drop down. We have a shift back bullish from yesterday. Now in the overnight session, you can see respect of that with 4-hour accumulation in the lows. What do I mean by that? Well, let's look at this range here. The low of this candle's range was taken by this candle's range here, but we closed above it. That's a sign of strength. We then did the same thing on the falling range. We have taken this candle's range that has already taken the previous candle's range and closed above it, indicating strength. And now we are printing up bullish at a valid location, the 4-hour change of the state of delivery. So discount array with discount sensitivity and accumulation of the lows, indicating that the work is done there. Now on the hourly, accumulation on the 4 hours also shown on the hourly, and all the volume transacted recently has taken place within this small range with accumulation of the lows. With this information, I still lean bullish and I'm looking for price to squeeze up out of this range. So now you can see clearly on the hourly time frame, I'm looking for price to leave the range higher. It's exactly what I'm looking for. That's it. Based on 4-hour hourly, I'm looking for this to squeeze up out of the range. The issue is I couldn't really determine, okay, what level is that going to happen at? Because in order for me to be a buyer, if I'm looking to be a buyer, then I need to see the market drop down into an area of fair value. An area of fair value for me to be a buyer. which for me would be a liquidity pool or an efficiency, basically what it comes down to. Now, looking within the impulse swing that the hourly time frame created, the new impulse swing created going into the open, there's not really a solid area of fair value for me to be a buyer. So here's the most recent impulse swing going into the open, right? If I am assuming the work to be done at this low, because there's accumulation and the market should not trade back down there because we've reacted off of that 4-hour change in the state delivery, the work is done there, indicated by accumulation, we should leave this range higher and not take this low, then how am I going to get on side of that? How am I going to be a part of that? Then I need to look for what? My area of fair value, which would be liquidity pool or obvious fair value gap. But you don't see that on the hourly or the 15-minute time frame. That's typically where I'm looking to find it. I'm looking for a gap or some liquidity pool with confluence on the 4-hour to 1-hour time frame or the hourly or the 15-minute time frame. So either the 4-hour and the 1-hour have confluence with the same discount array showing this is potentially an area for the market to react, or the hourly, the 15 have confluence showing the same discount array or liquidity pool indicating this is a potential area for the market to react and continue trading in the direction of the trend. Trend following. It's basically what I'm doing. In this case, I don't see that, right? If we look within this recent impulse swing, there's no new fair value gap, there's no new obvious liquidity pool, and the 50-minute basically tells the same story, right? So I'm assuming the work to be done here, but it does not create a new area of fair value for me to engage and leaves behind low resistance sell side. This was the issue with today, because if we look within that price swing on the 5-minute and the 1-minute time frame, it's not really looking valid to me. I need to see some obvious open area of inefficiency, which we had here. But this is really high in the dealing range, right? Or some liquidity pool for the market to engage. So looking within this swing low to this swing high, I couldn't really determine that. And if that's the case, then in order for the market to continue higher, I'm demanding one more external run on sell side and then looking to be a buyer. So that's the discrepancy that I arrived at today and why I couldn't really establish an area of fair value for me to be a buyer. So I say there's absolutely no internal fair value. So I'd absolutely be looking for an external run on the PM low to then trade higher. Overall, 50 minutes shows how flat prices is. I see a lot of overlap. It's very high resistance, nothing of probability inside this range. So my idea was, if I were to trade this, I'd speculate one more run below the 815 low to set up longs, clearing out low resistance sell side. So I'm looking within that range on the 1-minute time frame, and I'm noting how we do not have, obviously this is in hindsight, it's 2020 in hindsight, but at this point in time, I did not see anything where the market could drop into and continue higher within this range. So in order for me to engage long, what do I want to see? I want to see it drop down, clear out all this low resistance sell side, what I consider low resistance sell side, and then trade higher. But we never get that. We never get that. And it's actually, the internal idea is actually valid because the market should not trade back to this low because we have accumulation on the hourly and the 4-hour indicating that the work is already done here and the market should move away from that level. So I should not suspect this low to get taken. That was the biggest takeaway from today. The biggest technical lesson that I had from today is framing areas of where the market should react and areas where it should not react, right? So you have to put, when you're framing a trade idea, you want it to be high probability, high quality. You have to frame logic as to, okay, the market should not trade back to this for X reason, and it should do this for Y reason, which is what I've noticed is literally the pattern behind all my best trade ideas. They all follow this pattern of this should happen because of X. X being the logic supporting why that should happen based on the information market is giving me there in real time, what is in the chart. So I've done my daily audit every single time I have a really, really solid trade idea. This is exactly how it's formed. The market should do this because of X. The market should not do this because of Y. X and Y being data that the market has given me in real time, there, concrete, in the chart, as to why the market should behave a certain way. So in this case, it should not take this low because we have accumulation on hourly and 4-hour, and even the 15-minute. Look how many times the market purges the swing low, trading down into 4-hour change in the state delivery. So I'm not suspecting this swing low to get taken. So it needs to do an internal rebalance and then continue higher. But where's it going to do that? I don't see anything on the 15-minute that tells me it can do that. So I have to drop to the lower time frame and hone in on that area, which would be this small gap here. And again, this is hindsight. Hindsight is 2020. But that gap also has confluence on the 1 minute. So whatever I'm looking for an area to engage, it's always going to be an area of confluence across the 5 minute and the 1 minute time frame. That's also a huge pattern that I've found from doing a daily audit, studying all the days that I've taken trades, won and lost. All my solid trade ideas, what do they have? The area that I frame for the market to react, the level, whatever you want to call it, always has confluence. And the confluence is either across the 4 hour, 1 hour, or the hourly, the 15, or best case scenario, it's 4 hour all the way down to the 1 minute. You can see that level on the 4 hour all the way down to the 1 minute time frame. So this was the issue with today. I say this is not a trading day because the past 6 days have proven this condition has flipped from trending bullish to consolidation, and overnight pre-market price action indicate price is still flat. We trade in a small range. PPI doesn't even push price around to create some awkward print that CPI did. This is not the right market for my model. I need to see clean separation, and this is full of overlap, very awkward, silent delivery. So I still show up to the market. I still speculate on it so that I can go back after the market has, done its thing and see, okay, did this play out? Did this not play out? Why did it not play out? Why did it play out? And because I still do that, because I still show up, even though this is not a trading day for me, and I still formulate a plan and I still speculate on what could happen today, I learned a very, 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 very important technical lesson that will help me create better trade ideas in the future. So, gotta show up every day. Have to show up every single day. That doesn't mean trade every day, but that means show up every day and give yourself the opportunity to learn. Because if I don't show up at all today, and I don't attempt to create a plan at all, if I just look at the market and I instantly think, oh, this is a shit trading day, I'm just not going to do anything, then I don't get anything from today. So I never give myself the opportunity to learn. So show up and give yourself the opportunity to learn and grow from the day, regardless of if you're trading or not. And that's kind of how I felt going into today. I looked at the market and I immediately ruled out the idea of doing anything today because it just appeared flat, very, 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 very flat. And I saw this, and there's other things that I need to do, like for example, the daily audit. I have to audit every single trading day that I've had on the live account, which I'm almost done. I only have like 8 left. I've taken 55 trades across probably 47, maybe 45 trading days, and it's really, really extensive process. But I thought, that's more important. I shouldn't trade this day at all. But I said, no, just still speculate, frame a trade idea, see if it plays out. If it doesn't, why did it not play out? Again, if it did play out, why did it play out? So I still give myself the opportunity to learn, although I do nothing. And here's all the lessons I was able to take away from today. So the lessons that I just shared with you guys. What did I learn? Accumulation equals the work is done, which means look for an internal rebalance. So I'll read it. I saw the potential for price to squeeze up out of this range, but struggled to define my area of fair value because looking within the most recent bullish impulse swing, I saw no valid internal market structure, so I demanded an external run. This is why I missed the move. Why does it not do an external run? It's because there's accumulation at that low on the 4 hour to hourly time frame at a valid location, being that 4 hour bullish order block, which creates confirmation across the 4 hour to 1 hour. That price does not need to take the PM low because it has already done the work there. Accumulation equals the work is done, and I assume it does not need to trade back there and look for an internal rebalance of that impulse swing. And then here's the other important lesson from this. If there's accumulation indicating the work is done, I assume the low of that impulse swing will not be taken, but no clear area of internal fair value / valid market structure that has confluence on the 4 hour to 1 hour or hour to 15. This is everything that I just explained to you guys. So I'm able to reiterate the lesson that I learned from today without having to go back and read this, because I'm just like internalizing every single lesson, extracting as much value as I possibly can from every single trading day. Then I have to lower the time frame on my search criteria. So if I don't see the area for value on the 4 hour to hourly, right, because I'm looking for confluence, across the 4 hour to the hour with the hour to 15, then I have to lower my time frame search criteria to the 5 minute to the 1 minute, looking for inefficiency and minor sell side pool I can use to climb higher there. Which on the 5 minute, we had this small inefficiency. We had this upper inefficiency, which the body's never disrespected, right? So that in itself is bullish. And here's another piece of information we can use to anticipate the market to just go at 9:30. The bodies of these candles are dropping into the fair value gap, but they're closing above it. That's a sign of strength. So which means we can expect to drive below this candle's low to fail. that's another signature that I look for to anticipate reversals, and that happens today. So lower the search criteria to 5 minutes, 1 minute, look for inefficiency or minor sell side pool can use to climb higher there. On the 1 minute, already went over this. We have that obvious fair value gap on the 1 minute time frame. And even if we drop down to even a 15-second time frame, we can basically see exactly what I would look for to get on side, right? So again, if the higher time frame is bullish, and I say this in like every fucking trading video because this is just what I'm trying to do. This is just the setup that I'm looking for. If the daily to 4 hours bullish, then what does that mean? I'm looking for the market to drop down, offer some area of fair value. What is it doing when it's offering an area for value? Completing a lower time frame market maker sell model, which is simply dropping into a fair value gap, clearing out liquidity pool. That's it. So that's why I just said earlier on in the beginning of the video, all I'm really looking for is to drop into liquidity, take liquidity, or drop into inefficiency. That's it. That's it. But there's a couple different ways that the day can play out. In this case, we already have the reversal going into 9:30. We already have the reversal back in favor with the higher time frame, the bullish higher time frame going into 9:30. So all we have to do is wait for an internal rebalance of this price swing here. In some cases, we do not have the shift back bullish in favor with the higher time frame. So we have to let the market continue to drop down and then time the shift back bullish. Those are the harder trading days. And this is just what I found for my data. So it's just how I trade, just the model I'm looking for. So this was a day, you know, where the market just compresses and then we squeeze out of that range. I speculated the market would squeeze out of that range with conviction, but I just was not certain on how that could play out exactly. So I lean bullish. I'm looking for price to squeeze up out of this range, but I wasn't sure how that happened because we had that accumulation of the lows. So I know that indicates, okay, the work is done there. We should move away from that. But at the same time, looking within that price swing, where's the market going to drop into and climb higher? I couldn't establish that. So I say it's absolutely not a day I would trade. Market is flat. Although it appears it may leave the range, I would let it leave the range, let conditions improve, then be risk on. Not trade as it's leaving the range, speculating it's going to. So moving forward, this is going to be tomorrow will be the last day of me paper trading. The following week, I will be attempting the evaluation, my first evaluation attempt with Top Step 50K account, because I will have completed the daily audit. Like I said, I only have about 8 left. So what does that process even look like? I'll show you guys what I'm doing here. Let's see, let's go to a day where it is completed, like for example, the 2nd. Okay, all I'm really doing is I'm going back, I'm reviewing each field because I just walked you through my entire process. I established what I'm looking for from the daily, 4 hour, hourly, 15. So I'm going back, reading these, referring to my pre-market attachments that I have from, again, weekly, daily, 4 hour, hour, 15, 1, or 5, 1. And then getting an idea of what I was looking for going to the open, making notes, making annotations on them, what I noted, right? Reviewing my entire trade idea, and then how that affected my decision making intraday. So all these reflections here, going back, confirming that I have these marked properly, the rules that I had for the session, if I followed those, yes or no, patterns that I fired off, and then of course my reflection, and then adding additional lessons I learned in a further review. This is the most important part. This is going to be extremely revealing because this is going to reveal the patterns behind my patterns. Like for example, I found for the most part, the reason that I make trade management mistakes always leads with poor execution. If I hesitate on my execution, then I'm going to skew the risk on the trade. If I skew the risk on the trade, then I'm now risking an amount that I can't emotionally tolerate. If I can't emotionally tolerate the amount that I'm risking, that makes it more likely that I'm going to take my trade off early without giving the trade room to breathe and actually play out. So I'm identifying the patterns behind my patterns and why I make mistakes. And at the same time, I'm learning a lot about the market, how I read the market technically, how I view price, where I go wrong, and reading bias. Like, this work is so ass. Like, I'm gonna be honest, it's ass. It sucks. But the value that I'm getting from it and the improvement that I'm already seeing from doing this is just invaluable. It is invaluable. It's insane. Growing so much from doing this. And I've told you guys this before, like, the biggest breakthroughs are always made when you go back and study your data. So in this case, I'm studying every single day that I've taken a trade, reviewing what I was looking for pre-market, how that led to the decisions I made intraday, you know, reviewing if my plan was right or wrong. I'm dialed. I'm fucking locked in right now. So making huge strides. This sucks. I'm almost done with it. I can't wait to take all this data, all these new lessons, and basically refine it, you know, put it into some sort of structure, right? You know, like something like this, right? This is where I want everything written into here. This is kind of my plan that I've created right now for how I'm going to carry these things out. Like all my technical lessons, I want them to be here. Like how I'm refining my model right now, like what I'm doing exactly. Right, so I'm trying to name the patterns by my patterns to refine my model and then refine my system rules to combat those new patterns, because this is what I did that led to a profitable month in June. So I'm just going to repeat that. But everything will be documented in here, and the best part is I don't have to write any of it. AI is going to do it. I'll be like, yo, go to my logs, go to all my lessons, look at all the annotations that I have, look at all the lessons that I have recorded, pull them out, stick them in here. Boom, that's it. Entire roadmap of everything. So those are the next steps moving forward. So it's looking pretty good. You know, I am fucking hustling. I am working my ass off to get this shit back on the road. I took that 3-week break, and now we got some serious momentum going again. It's rough. It's rough. You know, sitting in this fucking room, in this cave all day, behind these screens, just trying to figure this shit out. But it will be worth it, right? All work works, and for every input, there is an output, whether you're aware of it or not. So just keep hustling, bro. Just keep pushing. So that's it for this one. I'll talk to you guys in the next review.